Hey guys, hope everything's going well. Today I'm going to go ahead and walk through this reversing entries document that I made because I think that some people have questions about what's going on, and this is one of the harder topics from the first few chapters. So I thought I would just make a quick video and explain kind of what's going on with the salaries and wages example. So the first thing that you want to think about with reversing entries is why are we making them? And because it doesn't necessarily, the intuition of it is not completely logical, right? It's kind of what I say at the beginning. It seems like, why are we making these entries? The reason that we're making the entries is mainly for administrative ease, and that will come into play towards the bottom here where we have these entries in 2016. That will become more clear as I demonstrate this. So let's just go ahead and jump into it. So in this situation, you have a company that's recording salaries and wages, right? This first entry here on 11/30 of 2015, where they're basically just paying out cash, right? So that's fine. That's a relatively normal entry. Then we have this entry on 12/31 of 2015, which is an accrual, right? That's an adjusting entry where we're saying, okay, these employees have worked for us and we owe them $31,000. And as a result, we need to basically say, okay, debit salaries and wages expense, credit salaries and wages payable for $31,000, right? And that's the same for if you have reversing entries or if you don't, right? So there's nothing different there. And then the only entry that's really missing here is that this salaries and wages would get closed to the income summary account, but for our purposes, we're really focused on the reversing entries, so that's why I kind of left that out. So now we understand that we have this adjusting entry here. Next, we're focusing on the reversing entry, right? So without reversing entries, there is no entry, right? We don't have to worry about doing anything on January 1st of 2016. But on the reversing entry side, we basically just make the exact opposite entry of the entry that we made on December 31 of 2015, right? So that's kind of where it gets its name, is you just say, okay, whatever I debited, I'm going to credit, and then whatever I credited, I'm going to debit. So in this case, on the first day of the next period, which is 1/1 of 2016, we say, okay, let's reverse out the payable, and then let's make the expense account go negative. So what do I mean when I say that? I kind of say that in the bottom, in the text that follows those journal entries. So what I mean by that is that you would have this payable sitting on the books, right? Because we accrued that as of 12/31 of 15, we accrued this $31,000, right? And so that is a permanent account that's sitting on the balance sheet. And so until we debit off $31,000, that's going to be sitting there, right? So as you can see from the journal entry on 1/1, it debits salaries and wages payable for $31,000, right? So our journal entry there is debit salary. The debit side is debit salaries and wages payable, right? So now we have a zero balance in salaries and wages payable. So we've taken off the payable, okay? And then now we have this salaries and wages expense, right? So because of the fact that we close all income accounts, so that would be revenues, expenses, gains, losses, anything that's on the income statement gets closed to retained earnings at the end of the year, we start off with a zero balance, right? So this is as of 1/1/2016, right? And that means that in the journal entry, right here, we credit the salaries and wages expense for $31,000. So what I mean by making it go negative is just, it's kind of loose terminology, but what it means is that normally these expense accounts have a debit balance, right? And so now we're making it have a credit balance. So normally they have a debit balance, and now we're making it have a credit balance, okay? Then we move, so that's what we had there on 1/1/16, okay? for the reversing entries. Okay, then when we go to 1/31 of 2016, which is when this company, in this case I said it was Walmart or whatever company it is. In this case, okay, without reversing entries, you do it like we normally would, right? In maybe 2021, in Intro to Financial, this is probably the entry that we were making. We were saying, okay, we had this payable outstanding of $31,000, take that off the books, then record the additional salaries and wages expense of $31,000, and then we have to pay out the cash. Okay, so we more or less understand how to do this part. This is the reversing entries part is kind of more where we're getting bogged down at this point. Okay, so then you can see on the reversing entry side, it says debit salaries and wages expense and credit cash, right? So what's that going to look like in our salaries and wages expense T account? Okay, it's going to look like this. We're going to have a debit right there, right? And that's 1/31 of 16. Okay, so that means that on the net, okay, in 2016, right, because these are both 2016, we've recorded 31,000 of expense, right? Because if we credit an expense for 31,000 and then we debit the expense for 62,000, we're going to end up with a net debit in the account of 31,000. Okay, so that means that in this period, we've technically only recorded 31,000 of expense, right? So now we can kind of compare the two methods. So this one here is with the reversing entries, right? We can compare the T accounts. So if we have no reversing entries, we can look at the T accounts as well, right? So you would have your payable, so that's still going to be 31,000, right? Because that's not going to change based off of the method that we're using for reversing entries. And then we would have our salaries and wages expense account. So if we look at the journal entry that we made right here, we can see that we credit the payable for 31,000, right? And then, so we credited the payable, we debited the payable, my bad. We debited the payable for 31,000, so that right here is clearing out the payable, so that has a zero balance, right? Same thing with reversing entries and not reversing entries. And then we can look and we can say we debited the additional expense that we incurred, right? So that's 31,000, right? So we can just go ahead and put that in our T account, and then we can see that we have 31,000 of expense under the non-reversing entries way, and we have 31,000 of expense under the reversing entries way, right? So at the end of the day, once we've made all of our different journal entries, we can see that you get the same result, okay? And so just to wrap up, how is this administratively easier like I was talking about before? It's easier because if you have a company policy that says, like let's say that you have hundreds of different types of payables, okay, each year at the end of the year. What you can do is you can have a company policy that says, let's just reverse out the payable, and then that way, the next time that we have to actually pay out cash, which would in this example be 1/31 of 2016, we can just debit the entire amount to the expense account, and then we can just credit cash for the full amount. So that way we don't have to worry about whether or not there's a payable still on the books, right? Over here, where we don't use reversing entries, we have to check and see, okay, is there a payable on the balance sheet? Yes or no? And then from there, we have to proceed, okay? Versus on the reversing side, we've already reversed out the payable. So there's no issue of whether or not there is an accounts payable, or in this case, salaries and wages payable, or whatever, still sitting on the balance sheet that we have to clear out. So that's kind of the reasoning behind why companies might use reversing entries and kind of how it works, right? And you can kind of see too, I walk through here the idea of you get the same result under both scenarios. And so as a result, it doesn't make a difference which one you use from the standpoint of the company involved, right? If on a quiz or an exam it says to use reversing entries, then you do. But we will specify whether or not you're supposed to use reversing entries. So the logic is similar on the deferrals. I'll go ahead and leave that one to you guys, but at least on the salaries and wages side, you guys can sort of hopefully see a little bit better how that works. If you have any questions, let myself or Professor Singh know, and we'll be glad to help. Thank you.